I would like to set the stage by talking a little bit about deep water in general. In last few years, we have heard a lot about deep water is part of the energy equation now and also in the future. But we got to set it within the content of where deep water would sit and what are the requirements. And are we moving ahead of the curve or we are behind the curve to get the deep water in par with the typical conventional oil and gas. As you can see from this chart, we usually use this as a benchmark, trying to convey that the population will continue to grow. There is no doubt about that. Actually, in the last few days, I think most of the population has moved to London. If you look at the traffic, it took me 2 hours to get from the airport. But population continue to grow. Population also no longer is local or regional. They're more on the global setting. And they have expectation. The expectation is access to energy. No matter where they are, no matter where the population concentration is going to be, access to energy is significant. Expectation is that the demand for energy continue to grow. There are different modeling can be used and tell you that it may grow by 55 million barrels by 2030 and beyond. But that 55 million include declining asset as well. Therefore, not only you got to replace what you are producing, but also you got to bring incremental production. Population is growing, energy needs to grow, where that is going to come from. For time being, our prediction is that 80% is going to continue to come from fossil fuels. 20% is going to come from what we call it the contributors to the fossil fuel. It could be alternative energy, it could be coal, it could be nuclear, and others. But fundamentally is there. And that's what we see. Fossil fuel is going to be a fundamental energy equation, and the rest of them is going to be implicitly linked into the formula. If you move on and saying, okay, if you recall in the 1980s, we were running around saying by the year 2000, 2010, we're going to run out of oil. I really clearly remember that. I think the definition was different. We were talking about conventional oil, because we haven't broke through the barrier of technology and organizational capability and investment to look at the other fossil fuel sources. If you look at it in the last 100 years, we have produced about 1 trillion barrels of conventional oil. And there is still 2 trillion left. And when you look at the entire fossil fuel equation, you can see we are not running out of oil. We're running out of easy oil. And that's a normal process. You're trying to basically harvest low-hanging fruit and move on as your requirement to grow. If you look at this chart, what you see on the right-hand side is requires certain fundamental changes. One of the fundamental changes is the price. The second fundamental change is technology. The next one is the human resources to move on into the more onto the right-hand side. But we are not running out of resources. We actually believe if we increase the recovery factor on any of these segments, it would improve what we have significantly. Now, is the price right enough to move to the left, or should we stay where we are on the conventional and increase the recovery factor? I'll talk about that a little bit as we move forward. Let's talk about deep water, global deep water. You know, when we talk about global deep water, people don't recognize that current discovered deep water resources are in South Atlantic Basin and Gulf of Mexico. I mean, that's where the resources are. And so far, there has been over 100 billion barrels discovered. The potential could be even greater than that. They're estimating around 250 billion barrels. But when we talk about deep water, we generalize it. It's like sometimes you talk about subsalt. Everybody thinks subsalt means something and is global. It's different. But anything greater than 1,300 feet of water is called a deep water. That's above the mud line. But when we get into the geology, when you talk about deep water, you're dealing with the same geological complexity and uncertainty that you deal with the unconventional. You could have a carbonate, you could have a sandstone, you could have a different type of formation and challenges. But when we talk about deep water, moving from one area to another area is really dictated by geology. When you look at the rest of the world, Asia and Asia Pacific, opportunities are there. We call it it's not explored well enough, but when you look at it, really what we have seen so far is in South Atlantic and Gulf of Mexico. Now, when we talk about deep water, that means resource bases that are in water depth greater than 1,300 feet, about 400 meters. That's what definition is. 8% of it is discovered. When you look at the technical year-to-date funding of technical 2P, however you add it up, is somewhere around 120 billion barrels. This is the area and the geology that we understand. And like I mentioned before, our estimate is that that's going to increase to somewhere around 250 billion barrels. There's a lot of potential there. And that potential is part of the energy equation. It comes right after conventional. And I'm going to explain to you why it make it to fall right after conventional, and some of the other end of the fossil fuel equation is pushing to the right-hand side of the equation. If you look at the growth, market, it drives maturation of any resource base. At the moment, 6% of the production, global production, comes from deep water, about 7 million barrels a day. Expectation is that in the next 10 years, that's going to double up. And if you look at the rate of increase in production, has been significant. Actually, we don't have anything to match this. There's a reason for it. And the reason for that is price is there. You won't be able to find deep water development at $20 per barrel. Technology, 20 years ago, wasn't there. And human resources capability and the technology that comes with it wasn't there about 20 years ago. That has been developed in the last 20, 25 years. Therefore, when you look at this chart, it's very encouraging. If you put it in perspective, deep water opportunity, and then you assume it if it's a country, it comes number 4. After the United States, Saudi Arabia, and Iran, or Russia, it would come number 4. When you look at the resource base, it actually is a replacement for what we call equivalent to the resources Saudi Arabia has. If you look at the chart on the left-hand side, you can see how long it took for Saudi Arabia to ramp up the production to the level that currently we are seeing deep water would bring into the equation. The cycle time. Now you're going to say, well, what that's supposed to mean? There's a big difference between the two. If you look at the period that the ramp-up was, the prices were high. And if you look at the ramp-up that Saudi Arabia has, it was really driven by the market. If there was a need to add more capacity, it was added. But what this chart's showing, that really deep water, what we know today, is significant to the energy equation. And the technology and human resources is there, and the market is there to make that ramp up the way that we are forecasting, that it will double up in the next 10 years. Now, when you talk about what's the difference between producing in conventional area like Saudi Arabia or deep water, start with safety. Do we have the safety behavior and practices in place in deep water to be able to produce at the magnitude that we want safely? The answer at the moment is, if you compare our industry on the chart on the left-hand side with the rest of the industry, our industry has performed historically much better than any other industry in the world. That's a reality, or all the industry that they are in OSHA. That's a fact. On the chart on the right-hand side, if you look at the rate in the time period of 2004 to now, we always have been below the other industry on the recordable. What does it tell? That the oil industry is a safe industry. And the era that we have gone, we start from land location to shelf to offshore to the deep water. And we managed to have a safe practices as we move deeper into the water. But from safety point of view, we are in the right direction as an industry. But I think industry is driving it to make sure there is a zero incident. And all the efforts by everyone, National Oil Company, IOC, everybody is in that direction. Also, we're developing technology to assist us to get there. Therefore, the first question is, you got a fossil fuel, can you develop it? Can you develop it safely? The answer is, the record shows that we have that practice in place, and we are focused on that. The next one is very important, is the evolution that partnership brought into our industry. If you look at pre-nationalization, there were government, National Oil Company, and IOC. National Oil Company were the, what I call the policymaker, and IOC had most of the resources. After nationalization, it kind of turned around. National Oil Company had all the resources. IOC were looking for the opportunity. They look at the deep water. They start looking at the heavy oil. They're looking at the alternatives and so forth. Then they had the breakthrough. The first breakthrough was we can go deeper offshore, and how the deep water came in play. And current situation is completely different in our industry. If you look at the partnership, we do have a government. And the government is really the owner of the resources. We've got National Oil Company, we've got super majors, we've got a super NOC. What is the difference between NOC and super NOC? Super NOC are the one that they really want to be a global player, but they want to be focused regional or local. The National Oil Company, they are really focused internally. They really focus on the upstream internally for the development of resources. Then you got a super independent. These are the super independent that they really focusing on one side of the energy equation. They're heavily involved in shale gas. They're heavily involved in deep water and so forth. They're independent company, and they are exploration-focused company, and they are opportunists. The reason I put this chart together saying the composition of our industry has changed. The frontier exploration success today is not happening by National Oil Company or IOCs. The frontier exploration in the deep water has been, majority of them, by a small independent or exploration opportunists. They made those discoveries. Therefore, the composition is changed. It doesn't mean they are competing with each other. It means we are complementing each other, and we are working on the same type of area of opportunity. And I assure you, with this formula, nobody is moving backward looking for conventional. Not many people are today interested to pick up reactivation activities, which in 1990 was one of the drivers. Or we can enter a field, do a better reservoir management, do things and so forth, and get an incremental production. We are looking for that big incremental production from the new resources. What the outsider bring? What are the things? Is the technology, human resources, and contract and commercial. If you look at the chart, it shows the cycle time for every activity that we have, and it shows the difference between deep water cycle time and the conventional. Average, it takes 10 years to develop a deep water opportunity, from exploration to the first production. The cycle time for conventional is much shorter. And when you calculate net present value, it always gives us a base, more tendency to move towards conventional. It really makes sense. The only problem is the conventional natural resources are depleting under primary recovery. And if you want to move to the next level, you got to go to enhanced oil recovery, like what we are doing in the neutral zone between Kuwait and Saudi Arabia, which is the steam flood or carbonate that give us incremental production, or you go to the even tertiary recovery by polymer flood and so forth. Therefore, that's also come at the cost. Therefore, the cycle time become a bigger issue for us. And we got to have that in mind, that the technology people and also the way that we arrange the contract got to shorten that cycle time. Investing in technology is the critical part for Deepwater success. Exploration, as I pointed out, we start understanding the geology that we see in the Deepwater. The pre-salt discovery in Brazil has been a significant, and that was due to the technology, seismic technology, that you'll be able to image below the salt, also in the Gulf of Mexico. And maybe there are possibilities, even we find something even deeper than 10,000 feet of water that currently we are drilling in the Gulf of Mexico, but we'll be able to get the image, seismic imaging. Drilling and completion, one of them is to identify the resources, but how are you going to complete some of these wells that they are in 5,000, 6,000 feet of water and be able to bring reliability and integrity to the well completion and so forth? It requires different completion. It requires different technology. Production technology, you cannot put a dry wellhead on deep water in 5,000, 6,000 feet of water. It may not be cost effective technologically, and reliability may impose some problem. Therefore, what you got to look at it is completely different technology. Subsea separation, multi-phase pump, different type of subsea wellhead. We got to work on all parts, not only one part. If you work heavily on the well completion and ignore the geology, it would be a failure. You got to work on all these processes at the same time. On the technology side, Chevron is working on a lot of technology on the deep water, on all the three parameters that I mentioned. We are looking at the dual gradient drilling. What does it mean? It means if you're in 10,000 feet of water, you're going to run 10,000 feet of pipe before you even touch the mud line. What we are trying to do is to bring almost imaging that you got a drilling rig sitting on the mud line. What does it do? It allows you to run more casing. It allows you to go deeper. By doing that, that means you got to have equipment to be able to handle that. We designed that, and it's actually working in the Gulf of Mexico. We're working on the different type of completion. This is an evolution to get us there. And the way that we are looking at it, whatever we do, it has to be safe and reliable. The other thing that is very significant, as I told you, Deepwater brings challenges, technical challenges, operational challenges, especially below the mud line while we are drilling. We do have a real-time drilling system in place, and they be able to monitor all the drilling activity in the deep water. And if there is a problem, they'll be able to get the experts together and be able to come up on the real time and answer and pass it on into our operation. The reason for that is you cannot afford to make a mistake. You got to make sure you got all the resources, you are applying so much technology to get the right answer and be able to implement it right away. This has been a successful. Currently, we are drilling frontier wells in some of the countries. All the information on the real time is passed on into our Houston Center, analyzed, feedback is given. If there is a problem, we'll be able to monitor that and come up with a solution, and we have a consolidated expert sitting in one room to be able to provide the answer. Long-term reservoir management. Wilcox Formation in Gulf of Mexico maybe had 10 to 15% recovery factor, something in that magnitude. Our goal got to be, how can we increase the recovery to 25%? When you look at the pre-salt in Brazil, how will we be able to increase the recovery factor in some of the pre-salt formation that would be in par with the conventional? We are still looking at that. And we are looking at the life cycle how we can improve the productivity, how we can be able to do pressure maintenance and so forth. Therefore, reservoir management for deep water is as important as what we spend at the mud line and above. If we don't understand the reservoir and the rock mechanics and geomechanics of the deep water, we are missing something. And we need to make sure that's happened. Is technology is there? Technology is evolution. We are finding more and more and more. I recall it 15 years ago, it was very difficult to get a subsalt imaging. Now we do it. Right now we are doing a real-time 3D, 4D seismic for deep water. We have done it in Agbami in Nigeria, and we're going to continue implementing some of those information and technology. Now, this is very important. Why do we need high prices? The chart on the left-hand side is showing you what is the average cost for drilling a well, onshore, offshore, and deep water. Average cost for deep water is about $150 million. I recall it a few years ago, you could develop the entire conventional field for $150 million. Now, just drilling one well, it costs you $150 million. The cost is a significant part of what the price needs to support. And if you look at it, you're saying, well, what has been happening on the discovery side of it? If you look at the chart on the right-hand side, historically what we have seen it on the conventional side, all the discovery are staying the same or going down. But when you look at the deep water, you're seeing that there is still great opportunity coming into the picture. It's not unusual to hear an announcement of 751 billion barrels deep water discovery. It's very rare to hear that one on the conventional side of the energy equation onshore. Therefore, opportunity is there, drilling activity is there, a lot of work has been done to make sure we be able to capture these resources. So far, there is about 2,400 wells has been drilled for exploration and delineation in deep water. And I think the plan is that the way we see it, in next 10 to 15 years, another 5,000 wells would be drilled for deep water. This chart showing even IOC looking at the opportunity differently. The chart on the right-hand side is showing that the conventional is declining. No matter where we go into the energy equation on the enhanced oil recovery or even tertiary recovery, we need something to supplement our business, to grow our production. And you look at it, the deep water is a significant part of it, and it shows that if you want to grow, you've got to focus on all those elements. The chart on the right-hand side, which is the investment chart, is show that every company has a different formula for investment these days. It's not surprising for one company decided to be aggressive on shale gas, another company be aggressive a lot on the deep water in certain region, because all of us trying to tap into that energy equation or the resources. And it's not right or wrong, it's just a matter of a strategy you got. And if you look at each of the company, we got a different contribution of investment to each segment of the hydrocarbon or fossil fuel equation. And we're going to see more and more diversity in that. Today, there is tremendous focus on the certain segment of our business. Shale gas has been in news, or shale oil, and as well as deep water. Now, with all the things that we are saying, bottom line for everybody, NOC, IOC, doesn't matter who we are, we've got to create enough value to be able to deliver dividends to our shareholder, provide revenue to the people of the country, and also be able to carry on with the investment for the future. What has been happening as the price is going up is not a matter of just the cost of the complexity going up, but the cost of goods and services has been exponential. Therefore, you include the actual cost because of the complexity for deep water and growth in cost because of goods and services. You can see today investing $8–10 billion in development of the deep water is a norm. And this is something we are watching for it. We are making sure that that cost would be part of the decision-making process. Now, this is a chart that shows when you talk about deep water is the maturity of region by region. The chart above is showed the Gulf of Mexico infrastructure. You see all those red dots? Gulf of Mexico is ready to move into the next phase. That means they got enough infrastructure there to be able even to tap into the smaller discovered deep water project. If you look at the chart below, is Africa, is West Africa. There is no infrastructure. There's not that much development there that you'll be able to bring a smaller field in. It's two parts to it. One of them is, well, there is a lot of opportunities there for the discovery and development. The other one is the size of opportunity got to be big enough to handle it standalone. But eventually, West Africa has to come in part with Gulf of Mexico, and Gulf of Mexico move in the different direction. The West Africa is what I call the South Atlantic Basin. It needs to have that kind of infrastructure on the Africa side of it to be able to monetize good portion of the resources that I'll show you, good portion of the 250 billion barrels in there. What does it mean? That means the contract term has to be sufficient enough to support building enough infrastructure to eventually tap into those resource base. Finally, to tap into the 280 billion barrels, these are the components you need. We must have safe operation in deep water, reliable and safe operation. The goal for industry has been and will continue to be zero incident. We've got to have a technology. Technology is the one that allows us to move forward. Investment in technology is a must. And we have seen it. That's the only way we'll be able to move into the deep water. Partnering with the government. It got to be a win-win situation. There's no longer is a competition. All resources got to come together to be able to get that challenge going on. Human resources. We're all struggling with the human resources capability and capacity. Adding another 50 million barrels a day to the production that we have today. Just calculate, see how many more people has to come in our industry to be able to manage those resources, safe, reliable, and best reservoir management practices. And that is the critical part of our success. With that, I hope I set the stage for a good question and answer, and thank you very much for your time.
Thank you very much, Phil. I would appreciate if you could stay there just for a minute and see whether we have an immediate question. Yes, the arm is rising. If I can get the microphone to this gentleman over there. Yeah, they see you. The arm is sinking, but you're still visible.
Thanks. Nick Coleman from Argus Media. I just wonder if you could elaborate on the dynamic of the role of the independents, the IOCs and the super NOCs that you described. You seem to imply that the IOCs are becoming more risk averse in these deep water frontier territories, maybe leaving the work to the independents. But earlier today, we've also heard that independents now have trouble accessing capital, and that there's maybe an increasing role in the global industry for the NOCs to take some to make acquisitions and take up some of the role from the independents. Do you see a future trend? Can we assume that the super NOCs will become more and more important in deep water and the independents less important, or how do you see it? Thanks.
Well, you know, the diversity that we got is required to the fact, as I early on pointed out, we got to continue to add more production. And it doesn't mean one is changing to another one and so forth. It means the opportunities are there. The opportunities are there for everybody to play, be able to go after exploration development. And if you look at the independent or you look at our exploration company versus IOC, they really complement each other. You know, the big IOCs are well structured for project management, execution, and handling the large capital investment. On the other hand, you look at the independent, they are much more equipped to getting the resources in a certain phase. What that chart showing that there was a time all of us were looking for conventional oil, but right now we are looking for all opportunity, and that create a framework for everybody to participate. We do participate in frontier exploration as an IOC. A small independent also participate, but it's just an opportunity that is created. And it goes back that everybody recognized that we are not running out of resources. And they said, if you are not running out of resources, where are they? And that's where the opportunity has been created. It's not a competition. It's not a matter of one is riskier than the other one. It's just a matter of they're independent, that they are fully involved, or a smaller company in shale gas. They are independent, and the smaller company, they are in deep water. Majors are also involved in that. And if you look at the trend, everybody playing different type of activity to make sure we fill that gap of the energy, the production, incremental production that we need.